So Tesla released their Q1 2023 and it wasn't a miss, but it also wasn't a beat. It was as expected. But the whole market, every investor is pretty darn upset because the margins weren't so great. Even someone myself who's going all in into Tesla stock, I thought the margins would be a whole lot higher than what it was, and it wasn't. It was a big rip moment for me. And for you guys too. So what I'm going to do in this video is I want to go through the good, the bad, and the reality. Because all of us here, we kind of need a little bit of a reality check this year. At least for this year. Because I am bullish for 2024. But this year, 2023, this Q1 2023, the earnings report that came out really changed the way I view earnings now. I completely changed the way I do the numbers. Before it was 70-80% accurate. This time is going to be 95% accurate. We'll put it to the test to Q2, see how that will happen. But I changed it entirely to be more accurate because again, I was expecting 97 cents to $1 and we just got as expected. So definitely the way I was doing my calculations, the estimation, something was not right. And so I spent about 3 to 4 hours straight just clearing it up, making it more accurate as possible. I'm going to talk about that at the end of this video as soon as we get through the good, the bad, the reality points that I made here based on yesterday's or Q1 2023 earning report. So if you guys are ready, smash that like button and subscribe if you haven't already. Let's go. So let's first start off by talking about the good. What came good from this earnings report? Well, the first things first is that, well, it wasn't a miss. They didn't miss earnings. It was just as expected of 85 cents. And despite all the price cuts, Tesla managed to get a profit of $2.5 billion, which is, pretty good. And they also had a cash flow of $400 million, just north of that, but they were positive cash flow this quarter. So that's a good sign. Two good things that I liked about this earnings report is their service and others, and their energy is growing rapidly quarter by quarter. Mainly energy though, although the gross margin wasn't as high as previous quarter, it's still growing year over year and quarter over quarter. And this thing, energy side, man, I've already made a video how Tesla Energy can take Tesla stock to new heights, and I still believe that 100%. Check out the video here. Now, when demand came into question, Elon did say that orders surpass production. I mean, if that's the case, why is there so much inventory? And if that's also the case, why do they keep cutting prices? If orders are surpassing production, I mean, if that's the case, they should be selling them and not having too much inventory. So if someone can comment down below why that's the case, I think it's consumers knowing that they're going to continue reducing prices, so why get it now? I mean, I would feel the same. I mean, low key, I kind of do feel the same, and I can't get a Tesla in the country that I am right now. So I can only imagine what customers feel in the countries that you could get a Tesla and they're slashing prices every other week. So if there's another reason, comment down below. I'm curious to know, but this was pretty interesting for me. Another great news that made me go like, sheesh, is the Cybertruck. That's going to be made or start production next quarter, Q3, which is a sheesh moment. In fact, they're going to say it's going to be a delivery day event, end of Q3. So that got me very excited. And honestly, the Cybertruck is going to be a reset for Tesla stock. Because first of all, there's not going to be any price cuts for it because there's a big demand for it and there's not going to be that much supply. So prices are actually going to keep going up and it's going to drag the average selling price, as well as it's going to come down to how many Cybertrucks are they going to make and sell every single quarter and year. And if that continues to ramp up, it's going to make more money for Tesla, more revenue, and eventually bring the stock price higher. But again, this will come by itself once the macro environment relaxes a little bit in 2024. And last but not least, they had over $22 billion in cash. That is a sheesh moment because that is more than enough to get through the storm coming in the next 2 or 3 quarters. $22 billion. That's a lot of cash on hand. And yes, they're going to continue generating cash next quarter and the next quarter after that and the next quarter after that. So it's going to add on. But worst comes to worst, if they do have a negative quarter, just sitting on $22 billion of cash. So we're going to be okay. We're going to be more than okay in this recession. So that's all the good stuff that I found in this report. Now, there was some other ones as well, but these were the main ones that I think were pretty darn important as a Tesla investor is going all in. Now, let's go ahead and talk about the bad because we need to talk about the bad. First of all, was I the only one that realized that in Q1 of 2023, they removed credits, the regulatory credits in Q1, and they also removed the automotive gross margins? Because I was comparing it to Q4 of 2022, and I don't know why they would do that. Comment down below why they would remove these revenue sources and information. That was a bit, I was scratching my head. I'm like, why would you do that? So again, please comment down below why they would do that. I'm very curious to know. But nonetheless, after doing some analysis on Q1 earnings report, I found out that if they didn't do the credits, they would have been in a negative cash flow. Because again, look at the statement, 400 million in cash flow, but then there was 521 million in credits. So that's a little bit concerning for me, because next quarter, if they don't have enough credits, or if they don't, sell enough credits, they could potentially be negative. Now, again, they did have over $2 billion in capital expenditures, but nonetheless, a negative. I mean, that's a little concerning. But again, they had $22 billion in cash, so I'm not that concerned. But still, a little bit shocking for me to see that, my God, 440 or 400 million in free cash flow was because of the credits. Sheesh. And that's a bad sheesh. The other bad thing was something that we all didn't like, and the reason why the stock is down 10% is the margins have been slaughtered. From 16% operating margin to 11.4%. That is crazy. I was not expecting 11.4. I was saying 11.5 if things were terrible. But they got 11.4. So that was a shocker to me. And you know what else is going to be a shocker? Is that this number is going to continue going lower next quarter because they keep dropping margins. Price cuts left, right, and center, and yada, yada, yada. We gotta see what's gonna happen this quarter. I am expecting more price cuts, especially on the X. I mean, look at that. There's so much inventory on the X. They gotta bring down the cost of that. They have to do price cuts. Model Y looks okay. Model 3 and the rest of them they look like there's going to be more price cuts to come. And Elon said it himself, man, that they're willing to sell at zero profit if necessary. So that's on the table too. But do I think it's gonna happen? I don't think so. I don't think we're gonna be in that bad of a scenario for Tesla to drop it to zero profits. And if that's the case, I don't know how Ford, Toyota, Nissan, GM, I don't know how those guys are going to react, because they really can't. So it's going to be a very interesting thing to see if that actually happens. But as a long-term investor, yes, stock price is going to keep going down for some time, and I'm going to keep picking them up as usual. And I'm extremely happy for that, because I'm going to hit my 1,000 share goal sooner than later. But someone who is a short-term investor should avoid Tesla at all costs. Even shorting is dangerous, because you never know. It could bounce back up anytime. A news could come up and say that Tesla's no longer cutting prices and, they're cutting rates again. It's a very volatile market, and really short term, I would just close my eyes and go to sleep, man, and just avoid the market. Another thing that shocked me was the average selling price. I thought it was going to be around 50,000. The thing was at 44,500 per vehicle. That's crazy. That's absolutely insane. Because in Q4, when we calculated together, it was 50,000. Now it's 44,000. That's crazy. That is absolutely flipping crazy. And again, what's even crazier is that this is going to keep going lower. Maybe in the low 40s. It's hard to see it to go below that, but it's Tesla. They're willing to go to zero profits if necessary. And the result of all this margin cuts, price cuts, average selling price going lower is that Tesla stock price, the price itself, is going to be trading around the mid 150s, maybe in the low 100s for some time, maybe until the end of this year. I made a chart for it and everything, but that's going to be in a separate video. What I'm going to do in this video is show you what the stock price could trade at for this quarter at the end of this video. So stay tuned for that. And the other thing that got me a little bit shocked, a little bit concerned, is that they were asked how many deliveries and productions are you going to do in 2023? And they said, right, Elon said that in production, they could do, if all things go well, up to 2 million, which is good. 2 million? Sheesh, that's really good. But he also said that if things go well, if things don't go well, they're still aiming between that 1.8 million production. Not deliveries. I mean, I had to read it a couple times. I had to go back and rewind that part, that what he was saying. 1.8 million production. I thought it was going to be 1.8 million deliveries. So that's a little bit, I'm a little bit baffled there. So if you guys can clear it up in the comments for me there as well. Maybe I heard wrong. I mean, I replayed it 5-6 times. I did not like that answer. But nonetheless, we're going to do our own production and delivery numbers here as well in the next few upcoming videos. So stay tuned for that. We're going to see how much they're going to deliver and produce in Q2. So that's all the bad things that I got from this financial report and earnings call. Now we gotta go into reality, because we all need a reality check. So sit back, sit tight, eat that popcorn. Don't be so nervous, because everything's gonna be okay. And smash that like button. And the reality is, we're in a recession, guys. We're in a recession. We're either going towards a recession, or we're already low-key in a recession. And what happens in a recession, guys? There's no demand for vehicles. Nobody, in the middle of a recession, when interest rates are high and all they care about is getting food on the table, paying their mortgage, because their mortgage now is 2 to 3 times more expensive at the minimum if it's not fixed. If it's variable, rip. So no one's really looking to get a car right now, even though if they may need it they're still not going to get it. In all the recessions that I've been, and obviously the data says that as well, is that nobody looks to buy something that's very expensive, like getting a car, 30,000, 40,000, 50,000, whatever the amount is. No one cares. Nobody wants to get a car because they just can't. They're stretched too thin. But the opposite is true when we're not in a recession, when we're not in the cycle, when we're in expansion and recovery mode. It's a whole different ball game. And Elon Musk did say it himself that during these times, the expansion times, there's going to be a pent up demand. So the guys who weren't buying vehicles now, when things are getting better, when interest rates are lower, and when they're not stretched too thin, then they're going to go look and get a car. And this is something that the masses, it's going to happen in a mass, it's going to happen in a wave, and that's we'll see price increases will happen. But that's not going to happen in 2024. So that's reality point number one, guys. Recession time, you have to accept it that there's going to be people not looking to get cars. Whether it's a Tesla, whether it's a Toyota Corolla, whether it's things that's high in capital, they're not going to get it. And this has data and history from recessions. Unless you're filthy rich, have a whole lot of cash, then I guess you'll have a great deal. You can get things on the great deal. I mean, that's what they say in recession. The richest strike in the recession because everything's on sale, and if you got money, if you got cash, you can do it. But also, recession makes people rich as well because things go on sale. And again, if you got cash, well then you're in a good spot, my man. In my case, I have cash ready to buy the one thing and one thing only, Tesla stock. Now, the other reality checkpoint that I want you guys to fully understand and to really grasp is that Tesla's going to continue cutting prices. Until end of this year, they're going to continue cutting prices and, if necessary, sell it at zero profit. But remember, the more vehicles on the road, and I made a video about it too, why Tesla price cuts is a good thing, is that the more Tesla vehicles you have on the road, and once, full self-driving is fully solved and approved, well then Tesla's going to make a whole bunch of money because all they got to do is just make a feature on their car that full self-driving is there, pay the one-time fee or the monthly fee, and the explosion in profits and sales, obviously, is going to be next level. Think about, what's that one company that I'm invested in? Amazon, AWS. I mean, they were doing the online ordering and delivery as well, but then once AWS came, that thing took it to a whole new level, and it took it to the world's most valued company. If you guys remember, like 5, 6, 7 years ago, that's exactly what happened. And we're seeing the same thing happening with Tesla, but with FSD. The only risk here is maybe FSD will never get solved. But personally, as a long-term investor going all into Tesla stock, I think Tesla's going to solve it. 100%. So reality check number 2, guys. Price cuts are coming. Margins are going to keep going lower. And 2023 is going to be the year of volume for Tesla and not the year for profits. I know it's really hard for me to even say it because I was hoping they can make good amount of profits this year so the stock price could be in between the 200s, but I don't think it's going to happen this year. Maybe end of this year, but I don't know. I don't think so. Maybe Tesla will show a negative quarter coming in the next quarter or the quarter after that. But you got to be ready for it. You got to be prepared for it. I'm going to tell you guys what I'm going to be doing at the end of this video as well. So this way, we're both in the same boat. If you guys are going all in like I am, we're both in the same boat. And am I worried? Not really. Was I disappointed? Yes. But again, my time horizon is 2030. So whatever happens in between, I don't really care. In fact, I was hoping for the stock price to go lower, which it did, and I did buy, but I do hope that it goes lower, but this is the consequence. I mean, when you want something to go lower, these are the consequences. But anywho, we know long term is going to be okay. Now, these are the reality checkpoints that I want you guys to get embedded in your head. It's going to be a very tough year. 2023 is the year for accumulation. Now, whether that's Tesla stock or any other stock that you guys want in, any other investment, even flipping real estate, really. It's the year of accumulation. And as I always say, guys, the year of 2024, better times are coming because we are expecting not to be in a high interest environment at that time. And people will be more relaxed. And that's when the recovery and the expansion cycle is going to start. And once that starts, we can see a pimped up demand for vehicles. So it's going to be a great time. Now, this was the good, the bad, and the reality that I want you guys to keep in mind. I mean, these are the things that I took point when I was reading the Q1 report, financial report. Now let's go ahead and see what the stock price could be trading at in the first quarter of 2023, or in between April 20th till June or July, whenever Q2 comes up. So if you guys are ready, smash that like button. Let's take a look. Alrighty, as you guys can see right off the bat, the chart looks different. And I made sure that it's 95% more accurate opposed to 70 to 80% on the previous chart. Took me some time to do, but it's worth doing. And all the information here is all correct. One thing you guys may notice here is that the full self-driving section has been removed. And that's because I included in the average selling price. And speaking about the average selling price, I mean, look at that. Full year of 2022 was 54,000, just north of that. And the first quarter of 2023 is 10,000 less. And that's crazy. That's insane. Moving on to energy, over 1.5 billion. Total profits, energy profits of 168 million, revenue of over 23 billion, net income gap of 2.5 billion. Add the stock-based compensation, you get $2.9 billion. And then you got the EPS quarterly gap of 73 cents. And then we got the non-gap, which was the 85 cents. Nonetheless, the total EPS here is $3.39. Now, before it was in the $4, doing a little bit of more research, they get this EPS number from the diluted shares outstanding. So that's what I changed it at. And as we can see, there was a big difference. And as we can see, right before the crash, the stock price was $181, and that was based on 2022 or the Q4 of 2022, which would, if you give it 50 PE, a little bit over 50 PE, it's $181 per share, and our market cap $575 billion, and that's exactly what it was on Yahoo Finance when I took a look. Very close. So I know for a fact this is going to be a very accurate data as we go forward. Nonetheless, for Q1 of 2023, let's give it a PE of 50 first, and we get a stock price of $169 per share and a market cap of $536 billion. Now, right now the stock price has dropped like 10%, and it's around the 163, 164. So what is that? 49 PE, 48 PE, 163. So after Yahoo Finance or Google does update their Q1 2023 EPS and financial reports, you'll see a 48 PE there if the stock price is 163 bucks. If it goes lower, let's say in the 150s, that's a PE of 45. If you want to get a PE of 40, 136 PE. Gee, darn. That's crazy. You know what's even more crazy is that on Twitter, shout out to T on Twitter, he said that if the stock price goes to like 75 bucks per share, I'm gonna be buying more obviously, but 75 bucks per share would mean a PE of, I don't know, 20? No, that's 22. A 22 PE at a market cap very similar to Toyota. Could you imagine Tesla trading and being the same net worth of Toyota? I mean, that's crazy. It's hard for me to see that, but I hope I see that because, I mean, again, gonna buy more shares. But no, I think that's too good to be true, to be honest, for this to happen. I think we're gonna see a PE around the 40s, 35 the least if Wall Street gets extremely stupid, 30 PE if they just get dumb. You know, 40 PE to 50 PE around this time seems okay. If we go back to a bull market for some stupid reason, maybe a 65 PE, maybe even a 70 PE. I don't know, who knows? 40 to 50 PE, that's what I'm thinking the stock price could be trading at this quarter between April 21st to maybe even July. So mid 100s is extremely highly likely, and it's the most probability of that. Nonetheless though, these are all short-term noise. And if you guys are long-term like I am on Tesla stock, then all this just comes to you as a buying opportunity. Personally guys, what I am doing is I'm buying. I did buy today, but I'm not in a rush to buy anymore. You know, the panic buying phase, I'm not in that phase anymore because we have this entire year to dollar cost average. And I'm just not in a rush. I'm calm, relaxed. Instead of buying weekly now, I may buy bi-weekly or monthly, all depending what my financial goals are and all that kind of goodies, because I still need to save up for property. But nonetheless, I am still going to be buying. I am still going to be going all into Tesla stock. And I am, hopefully this year, if the stock price goes lower, man, then we're going to see my goal of 1,000 shares coming much sooner than later. And that's something for me to be excited for. So, sheesh, let's go. But guys, let's forget about the short-term noise. Short-term noise is always short-term. A decade from now, nothing's going to matter. It isn't. In fact, check out my 2030 to 2040 stock price prediction for Tesla and energy. And again, 2030 is my long-term scope and what I'm aiming at least. And I know you guys watching these videos, majority of you guys are long-term investors. And if you guys haven't watched this video, check it out. You'll be disappointed. Subscribe for more. And you know what, guys? Support our channel by becoming a channel member or getting some gold and merch. And yes, the wall poster is there as well. But anyway, guys, I shall see you guys in the next video. See ya.